Okay, hello everybody, and welcome to Investing with IBD for January 15th, 2020. I'm your host, Arusha Pierce, and with me today in the studio is Justin Nielsen, Director of Research at IBD. Thanks for being here, Justin.
Hey, thanks for having me again, Arusha.
Now, unfortunately, we were going to have Jeffrey Hirsch of Stock Traders Almanac on the podcast, but he's a little under the weather, so he wasn't able to make it. So we'll definitely try to reschedule him. And so Justin was kind enough to step in at the last second here.
Yep.
Unfortunately for Justin, I guess.
Yeah. Well, I got the daycare situated, and then I had this appointment come up on my phone saying dentist appointment. I'm like, I don't remember a dentist appointment today. I just had one. So luckily I called, and there wasn't anything. So.
Okay. On today's podcast, we are going to talk about the current market, long-term leaders, and we will end the episode with 3 current stocks. So Justin, let's get into the current market. And we are in an uptrend, a confirmed uptrend. We've been in an uptrend for a while.
A
strong uptrend.
Yes. I mean, look at this thing. I mean, if you look at it, it's holding the 10-day line. I mean, it's like.
And what index are you looking at?
Yeah, so just, the NASDAQ composite, it just feels like this is something that. And you know what? This is actually kind of something we expected. I hope you didn't have any thing that you're going to try and set this up. I'm just going to go right in.
Yeah, I mean, this is the magic of you.
It's too exciting. It's too exciting. I mean, because what we were looking at for so long was, we were getting these flat periods, and for as much as 2019 was great. It really was only kind of getting back to the levels that we got to in 2018.
Yes.
Really. I mean, there was almost like a 22 months of, flat action, if you consider from high to high. And so those flat periods, you can still make money in them. Don't get me wrong. But where you really make the money, where it just is so much easier, is when you come out of those flat periods. And that's what we really saw in Q4 of 2019.
Exactly.
And so I feel like really since October, this has been a great run. We've had some little, pauses, but even those pauses have been great for the market. And we might be seeing a little bit of that right now. We had a distribution day yesterday on the NASDAQ.
But we only have 2 distribution days on both the NASDAQ and S&P 500.
Yeah, so I mean, that's, again, you can't ask for anything better than that. And the distribution day yesterday, 0.24%.
Wow, so just barely. The minimum is 0.2, right?
And the volume was only like 1% higher than the previous day. So again, it's like, it just squeaked by.
Right.
Today, it kind of had some of the characteristics of stalling, but with such a small spread, and yesterday was a very small spread too. And when I say spread, I mean from the high to the low. Very generally tight. Trading there.
Yeah.
And so this just seems like a market that doesn't want to give up gains. And it seemed like that for a while.
Yeah, and this is really the last 2-3 months, it's been climbing that wall of worry.
Yeah.
Right? There's plenty of things to worry about if you're watching the news.
Yeah.
And this market finally, once it got going, just slowly crawling higher, slowly crawling away from everyone. And now everyone's been waiting for a pullback that never comes.
Yeah. And I mean, some of this news is, it's in any other environment would have just tanked stuff. I mean, between the China trade, now, that's kind of, settled down for a while. But I mean, you had the Iran, stuff going on, all that uncertainty.
That took like half a day for the markets to recover.
Yeah,
from?
Exactly. I mean, almost like not even half a day. I mean, it was like a
couple hours.
Right, a couple hours. I mean, I feel like by the end of IBD Live, we were like, hey, this is not looking so bad right now.
It was kind of
and we were saying that at the time, and that's one of the things is, be very careful of acting too quickly on news. So when that Iran stuff was happening, and even when the missiles were kind of going to Baghdad and some of those airfields, we were kind of saying, hey, you know what, this is bad action to open, but let's take a look and see what happens. And it was almost immediately that stocks were starting to find support very quickly.
Now, luckily for that was for us, for investors, that was during the nighttime for us.
Yes,
because the futures.
Oh, yeah. The futures.
Actually, we were still at work when the futures plummeted.
Yeah.
And I was like, oh my God, here it comes. And we've
all
kind of been,
the futures got down to
like
1.8%? 2% maybe? I feel like it wasn't even.
Yeah, but the way they plummeted, like,
that was immediate.
Right.
Yeah, sure.
But then by the next morning before the market opened, they had come back like probably 90% of the way.
Oh yeah.
So so that was giving an idea. But one of the key concepts, the way you're in a good market is how the market reacts to news. Well, I mean, this is for
Just
either
kinda
good or bad market.
shrugs it off,
So you get bad news, and if the market can kind of shake that off and recover, and a lot of times good markets still gap down at the open, recover by the end of the day. If you're in a bad market, they gap up, and then they sell off by the end of the day, right? And they'll take any kind of bad news, even good news sometimes, and sell off. So that's one way you can tell whether you're in a good market or not. And as Justin said, it's been shaking off a lot of bad news for the last few months.
And that point that you made, about how kind of bullish markets act, that, they might start weak but close strong. I mean, that's something that Mike Webster has been talking a lot about on IBD Live.
Yes.
I mean, we've all been talking about it, but it's just we've been seeing a lot of that repeat over and over. So the market is kind of doing exactly what we'd like it to do in an ideal scenario. Ideally, we could pause here a little bit, just let some of those moving averages catch up. Even if we don't, we still have a lot of setups out there.
Yeah.
So a lot of stuff is extended on the stock side, but there are still setups out there that seem like they're working.
Yeah, and what's kind of interesting is it's really been like the last 6-8 weeks.
Yeah.
Where a lot of our kind of stocks have really come on. A lot of the software stocks have started to build the right-hand side of the basis, and now they've broken out over the last few weeks. And that's also another sign of that you're in a good market, more participation from all different types of industry groups.
When you start running your screens and it's like, oh, look at all of the stuff that looks actionable or could be actionable at any moment. And, granted, software was so strong in 2019 at the start, and then it looked like it was done, but then it came right back. I mean, a lot of these same names, these same leading stocks, just bounced right back, and it really kind of showed you who the leaders were. The ones with the strongest relative strength lines were the ones that were the ones to be in. Yeah.
So let's talk about IBD Live a little bit, and then we can keep this conversation going too. When did we start IBD Live? Like a couple months ago now. That's when he launched it.
That sounds right. I mean, we were doing a lot of testing, before we had our beta, so it was like a very limited amount.
Right.
But now we've been live. IBD Live's been live, and out there for a while, and it seems like it's we're getting a great reception.
Yeah. The feedback has been really good, and so we start the show. And you can have a rotation. Well, Justin's one of the regulars on the show, but the show goes from 9:20 a.m. Eastern to 10:30 a.m. Eastern. So like an
10:30-ish.
It's true. We were ending right on the dot at 10:30. Now it's kind of going to 10:40.
I gave Chris the 10:30 warning today, and 10 minutes later we were still on. So.
Yeah. Well, that's what I was telling the guys at Marcus Smith, because we have it broadcasting on the TV there, and I said, give it another year or so, and this is going to be an 8-hour show. But I'm usually on like once a week, but I have become addicted to the show, and this is just pure honesty. Every morning now I have to log on just to hear. I found it's become part of my routine.
Yeah.
And I found it very helpful. It helps me stay on top of the market even more.
Right. And it's one of those things where in the content department we have the benefit of being able to check each other. We will throw an idea out there, and we can kind of debate it and toss it around. Oh, but I like this, and did you consider this? And there's something that's, especially because of how much experience is down there. I mean, I have 22 years experience at this point, and I'm still on the lower end. I mean,
you might be the lowest, right?
Yeah. We got Rachel. Rachel's helping me out.
Okay. Yes.
And
but out of kind of the regulars.
But out of the regulars, I'm the newbie at 22 years. Like, how is that?
Just a young Padawan.
So that's just one of the things. And not only that, but you had people that were working directly with Bill. Of course, I was his assistant for 15 years.
Yep.
Chris was working directly with him when he was writing the big picture, coming up with product ideas. Mike, sat in his office and spoke with him every Sunday for years and years.
Mike Webster.
Mike Webster, right? So and then of course David, and he's been around forever. Ken's been around forever.
Yeah.
You just have a lot of experience, and we kind of check each other, like, and that's what we've been doing for years and years in content. Now we're just doing it live.
Right.
You're really kind of seeing what we do on a daily basis, and we're just kind of doing it so everyone can see.
Yeah, it's interesting because it kind of opened my eyes too, because I had no idea this. You guys would have that kind of environment. I mean, it's completely different.
Now
for
you
us.
want to be, you want to be in there.
I kind of want to go and sit with you guys now.
Yeah. Mike Webster moved down, and he's like, "This is kind of cool."
It is kind of cool. Yeah, but because even for us at Marksman, that was always the assumption that we were always talking stock, but we're the opposite. We never talk with each other about stocks because it's very kind of pure and personal. Right?
A lot of people kind of feel like, oh, you know what, I'm going to keep it to myself, and I don't want other people to get in my head. But sometimes there's a benefit to kind of sharing and helping each other and stuff like that. That's the way a lot of traders are. It's kind of a lonely thing, and that's
what we've kind of been hearing from a lot of people about the master's program that we met, and then when we've gone around, a lot of people have said that. Have said it's because it is being trading. It's kind of a solitary kind of event. It's hard to find other friends to do this. I can never find any other friends.
Yeah, well, that's your personality.
Well, yeah, that's true too. But here, so I've personally found it helpful just sitting and listening. I have caught some stocks that I would have never caught. Because of the show.
Absolutely.
So
it just gives you
I'm
more
a huge fan
brain
of
power, kind of.
Yeah.
More people looking, people looking at different things.
Yeah.
It just helps you not miss stuff.
Yeah. So for those of you, check it out if you haven't. I think it's a lot better than I thought. It's coming out a lot better than I thought. I was at first like, I don't know about this. An hour long, but
and it goes by so quick.
Yes,
it's amazing.
It really is kind of funny, but I've enjoyed being on it, and I definitely
we have fun
enjoy.
Too. I mean, it's a fun group of people.
Yeah. So the market continues to act well, and leading stocks continue to move higher. Now, we have just started earnings season. Okay, so you want to make sure you know when your stocks are reporting.
Absolutely.
So let's take a quick break, but when we return, we're going to talk about a new project that Justin has been working on.
Yes.
We're calling it LongTerm Leaders. So Justin will give us a little bit more insight on that.
Working name.
Working name, yeah, exactly. Stay tuned.
Pick winning stocks with MarketSmith. Growth 250 shows you ideas with big potential. View charts packed with key data. Use pattern recognition to see action zones. MarketSmith by Investors Business Daily. Try 3 weeks for $19.95.
Justin Nielsen is our guest on Investing with IBD. Okay, Justin, let's talk about this new concept that you've been working on. I just found out about it a few hours ago.
Right, exactly.
Which was kind of like...
Yeah, you asked me to show up, and I'm like, hey, you know what? I got an idea of what we can talk about.
It's called, the working name right now is called LongTerm Leaders. And it's a project it's a concept and an idea that I'm definitely excited about because I've always felt that searching for these type of stocks is something that we need to do, and it's something that we haven't done well enough.
Yeah, and understand that there's a lot of different ways to attack the market. You can be a lot more active. I mean, of course, on the one end you have the day traders, and then on the other end you have the people that are saying, you know what, I want to buy stocks that I can just hold and forget. We're not on either camp, right? We're definitely somewhere in the middle. But even within that, we kind of vary considerably. I mean, there's a lot of people, think of our style of investing as, short term and, stuff like that. But, a lot of people forget that, hey, Bill O'Neill had stocks that he held for years. Pick and Save, 7.5 years. Price Club, what was that, 3.5 years, something like that. So there's nothing wrong with, when you get one of these winners, holding onto it for a long time, as long as it continues acting right. And so that's what the LongTerm Leaders is more geared towards. And, a lot of the research we were doing last year in terms of how do we get better with some of our products, like we have the Leaderboard product that we're kind of coming up with ideas. And, one of the things that we could have just done so much better is if we had just held some of these, while they were above the 10-week line.
Yes.
Wait until they, breach it significantly. And if we had just done that, we would have had a much better gain on some stocks like Shopify. And it only takes like one of these to really kind of change your year. And exactly. So that's kind of the concept behind the LongTerm Leaders is here we're going to go for some of these slower names. It's not necessary to have your portfolio just filled with the high octane IPOs. But if we can identify some of these characteristics of the LongTerm Leaders, what they look like, and what are the different rules that you do for buying them and for selling them?
Yep.
Because holding them is where you really get the big gains.
So let's go over some of these characteristics that you're looking for in a long-term leader. So what are some of the basic ones?
Well, one of the big ones, fundamentals are very important to us. And a lot of people forget because we spend so much time on charts a lot of times, they don't realize that, a lot of us are looking at the earnings kind of almost first because we screen off of that and we don't even look at charts unless the stocks have earnings.
Right, because we're going to narrow down a lot of times the stocks from the 5,000 plus that we have in our database down to a few hundred.
Yeah, exactly.
So we already eliminated 90% of them, 95%.
Right. To get that cream of the crop.
Right. Yeah.
Right. Now, at times you're going to have some or statements in there. Sometimes, this IPO, it doesn't have earnings growth right now, but the sales growth is triple digit.
Yeah.
So that's kind of a different animal.
I look at it's either fundamentals, they have great fundamentals, or the or is if they have this really great story.
Yeah.
Right. And so then I can get a little bit looser on the fundamentals.
Yeah. Now, with the long-term leaders, sometimes, and in your traditional can slim, the criteria that we used was 25% earnings growth for the quarterly, last couple quarters, and also for the annual growth, looking at a 3-year or 5-year annual growth rate of 25%, which, again, is phenomenal.
Yep.
If you can just imagine if you grew your salary 25% a year for 3 years. Doubling your salary in 3 years? Yeah, sign me up. I'm all for that.
Exactly.
But with some of these long-term leaders, what's more important is the stability of the earnings. Chips, for example, they don't have stable earnings. You get a very choppy earnings growth record, because there's the investment that businesses will do, or there's, different cycles in terms of the chips. So it can be very, very choppy in terms of its earnings growth. But what we're looking at is those stocks that have great earning stability. And there's a stability factor that we have in MarketSmith that people can look at, and it's a rating from 1 to 99. But in this case, unlike the EPS rating and the relative strength rating and the composite rating where 99 is the best, in this case, 1 is the most stable.
Right. So the lower the better.
The lower the better. Because that means
you want it lower. Yeah, for the most part, you generally want them lower than 20. But I think when you're looking for these kind of stocks, these long-term leader type of stocks, you're looking even lower than that, right?
You get a lot of single digits.
Yeah,
you get a lot of single digits. So that's one component. There's a few things that are kind of also these things that Bill used to use as kind of extras, like cash flow per share versus EPS. So this is something that we don't generally talk about. But in the original version of the IBD 50 that Charles Harris and I were working on, this was one of the components in there.
So cash flow versus EPS. What was the type of criteria you were looking for?
Yeah. So you definitely want larger. You want that number to be larger for the cash flow per share versus the earnings per share. And it just kind of, again, shows the strength of the company. The higher ROE. Now, whenever you're looking at a big ROE number, you have to look at the debt too to make sure it's not coming from that. But, that's another factor. And, the other part here too is if you just look at a monthly chart, a lot of times these long-term leaders with the earning stability over a long period of time, you'll just see how on the monthly chart, it looks so easy.
Yes.
They just keep on going and going. And, because of that, sometimes your buying might actually be a little bit different because for a lot of these, and this is something we've been talking about on the IBD Live, Chris Gessel mentions the stair stepper, and these can be frustrating because what happens a lot of times with these stair steppers is they go up, and then they go flat, just like a stair does.
And they bore you out.
Yeah,
right?
Exactly. It's just one of those things where you're like, this isn't going anywhere. And I see everything else, and it's like the same thing when, you and I both have to drive the 405.
Right.
Me a lot longer than you do. And, if you change lanes on the freeway and it's like, I got to change lanes because this lane is not going anywhere. And then all of a sudden you change lanes and,
they're going.
There it goes. Okay. So these stair steppers can be a little bit difficult in that regard because, they bore you. It's like it's not going anywhere. I got to move into something else that's, moving faster.
Right.
But this is where the long-term leaders, you're going to handle differently. And where we found the 10-week moving average line so important for our leaderboard product. For a long-term leader, you know what? It might be the 40-week line. That's more important. And sometimes the breakouts, because these are stair steppers, sometimes the breakouts are not the best part to, the best point to look at them, but more those reversals from those moving average lines.
Because there are a lot of them aren't going to be necessarily good breakout stocks.
Yeah.
Right? They'll break out and then they just pull back.
Right, exactly. And the pullback, this is the most frustrating part of them. You're sitting in this pullback and you're like, it's not doing anything wrong.
Right.
It's just not going anywhere.
Exactly.
And but there again, if you take a step back and you look at the weekly chart, and unfortunately, this is a lot of times what I've done after the fact. I look at some of the stocks that I owned, and I'm like, okay, I own this. How did I miss, that this just kept on going up week after week after week? It had a little break here, maybe, and it was just because it was slow, that it just, you look at the daily and it seems like it didn't go anywhere, but you look at the weekly or the monthly, and it's like, holy cow, this is a phenomenal mover.
Right. So let's go over some examples, and then we'll go in more detail in some in the three stocks at the end.
Okay.
But do you have some examples on
the
monthly?
Maybe one of the poster children, that we've kind of been using as a model. If people look at a monthly chart of Fiserv.
So that's FISV.
Yeah, FISV. Mm-hmm. And again.
So you want to look at this on a monthly
let's go ahead and start.
Chart. Yep.
Let's start on a daily. Okay, we'll start on the daily, just to kind of get that different perspective.
Yep.
And so again, there's a lot of this that has the stair stepper, kind of mentality. And you'll notice that a lot of times, where does that step come? Earnings. So you get the earnings that goes.
Yep.
It has a nice move, and then it just kind of goes flat for a little while.
So, for instance, back in July of 2019. It reported a big earnings right there. Mm-hmm. Had a 9%.
9%. So again, it's like
company,
it's not 25%.
Right.
But what is important here is, again, if you have MarketSmith and you're using that stability factor, the stability factor is 3. So that means that these earnings are very stable. If you plotted it on a line, you would just see this line that steadily increased for the earnings.
But on that earnings report in July of 2019, after it gapped up on that day and closed at 102,
so a 6% move that day.
6% move that day. By the end of the quarter, on November 6th of 2019, right before its next earnings report, it closed at 104.91.
Yeah.
So it went up to a high of 109, came back and just built another range and set itself up again for the next earnings report and then jumped.
And this is where people could say, oh, wow, there's no way I'm sitting in something, dead money for a quarter.
Yep.
But now if you switch to the weekly, okay, you see how this has really just kind of followed that 10-week line very nicely, and if you look at what it did in 2019, it went from basically 70 at the end of 2018 to ending at,
118 right now so far. Yep.
And that's kind of where it was at the end of the year.
It's a really slow mover, but
that's
it's one step at a time.
That's not bad.
One step at
one step at a time. And before you know it, guess what? You just did some good elevation there,
right?
And so this again, it held the 10-week line very well, and even more importantly, the 40-week line. You can see how the 40-week line really contained this move entirely. And so sometimes that's where with these long-term leaders we'll go ahead and switch to.
But then switching back to the monthly.
Yeah, now you
look at
the
monthly. That's what
monthly.
puts into perspective, and really that's and we started seeing this also on IBD Live with Chris bringing it up all the time.
Yeah.
That's where it started to. I guess it started to create the desire that, hey, we should look into this more.
Yeah.
Because there's a set of stocks that come on our radar, but we pass on them or we get out of them so quickly that are they're just growing at a different pace. It's a little bit slower pace, and they're just
slower.
They
but
continue
steady.
to go under the radar.
Yeah.
Right.
Yeah.
And then a decade goes by, they're up massive amounts, and they haven't done too much to really shake you out,
Yeah.
out of or break a long-term uptrend.
Exactly. And so that's what this list is going to be kind of built of, and what we're going to be doing. And again, we're still kind of working out exactly what this is going to be, but this is something that's going to be available to our subscribers. Kind of like the IBD 50. It's something where they'll be able to kind of look at a number of stocks that kind of fit some of the criteria, and then we're going to call that list to a smaller. Okay, here's what's on. Or kind of in the portfolio right now.
And the model is Fiserv, right?
Yeah,
Fiserv.
And actually, TDG is another great model.
TDG. Let's just pull up TDG.
Yeah, just if you want to look at the monthly chart on that real quick.
TransDigm, which is so TransDigm Group, and they're doing great on any time frame right now.
Yeah.
But it was shocking to me.
Yeah.
When I pulled up TransDigm, because TransDigm has been consistently coming up on the radar and up screens, and I tried a number of times over the last 10 years.
And a lot of times we talk about, like in the 1990s, we talk about the move in Cisco.
Yeah.
From its IPO base in 1991 or 1990 to its top in 2000. Right. And it was like, such a phenomenal move. But in order to hold through, in order to hold Cisco, you had to sit through some massive drawdowns, and just 40% bases, left and right. And these long-term leaders with the greater stability, they tend to not have as much of that, because again, the idea behind these is the slow and steady.
So keep an eye out for this long-term leader project that we're working on.
Yeah. So a couple weeks, expect to start seeing, a page.
You guys are moving pretty cool. Yeah, you guys definitely are moving pretty quick.
Yeah, we're gonna. Yeah, so we're gonna be speccing it out tomorrow. I mean, we chose the names at the end of the year, so that we have kind of in beta our portfolio.
Okay.
And actually the portfolio has been performing pretty well. So again, we chose these at the end of the year. So we took the closing price of $12/31/2019, and as of today, the portfolio ended up 5.5%. That's versus SPY at about 2%. So more than doubling, the S&P 500.
Perfect. Mm-hmm. So coming up next, we are going to discuss a number of stocks that are worth considering for your watch list. And these are also some potential long-term leader stocks.
Absolutely.
We'll be back. If you are listening to this podcast, you probably know how hot the stock market is right now. The indexes are breaking all-time records, and CanSlim style growth stocks are a big part of the reason why. If you want to learn how to boost your profits with IBD's stock lists and ETFs, check out our free webinar on Wednesday, January 22nd. You'll get current market analysis, tips for finding top-rated growth stocks, and buy and sell rules that generate consistent profits. Go to investors.com/webinar to register for free. We are back with Justin Nielsen on Investing with IBD. Okay, Justin, let's talk about some current stocks, and these stocks are part of that. They're coming off of that long-term leaders project that you've been working on, right?
Right, yeah.
And so the first one is UnitedHealth, ticker symbol UNH.
So this one was actually in our long-term leaders universe, so this is something that, again, our idea is this is something that would be accessible by subscribers as kind of like the larger list. And this is really, as with most things in the office, Chris Gessel, our chief content officer, it's really his brainchild. He kind of gets an idea. He'll kind of have Praveen, our programmer, do a lot of work. And I got to say, one of the great things about Praveen is, you often get these programmers that, you tell them what to do, and, they're like a computer. They're going to do exactly what you asked them to.
Yeah.
And then, you get it back and you're like, well, no, that's not what I wanted. But you said this. Well, yeah, but that's not what I meant. Praveen loves stocks and he loves trading. And so, he'll take something and then he'll say, yeah, but you know what? Then I was playing with it and I found out this, and so then that's where it gets exciting because, and I mean, he's like, sometimes he wrote his own like charting programming language. So he could say, oh, tell me this, about the chart, type thing. Yeah. So, it's really great having him around, and he sits right behind me, so we can just hey, Praveen, ask him a question. Now, of course, Mike Webster is going to be heavily involved in this as well, and so we got that universe. And one of the stocks that just came up, in terms of, hey, you know what, this is something that's actionable now was UNH. So
Okay.
we put that.
Now let's go back to the actionable though, because are for some of these longer term leaders, do you want to buy them as they're breaking out, or is they're coming out of a smaller consolidation, or as they're pulling back?
Yeah, a lot of times the pullbacks are where it's at. And just I want to make sure everyone understands. When I say pullback, I'm not talking about something like that's been, driven into the dirt and is in a major downtrend. We're talking about here's a major uptrend, and this is just pulled back a little bit off the highs.
Yep.
And that's what we're looking at. Because again, with these slow, steady movers, those pullbacks over the long term can be opportunities. Just almost like with an ETF. Like with ETF, we kind of change the way we handle those. And whereas buying on weakness is not our thing, with an ETF, that's something that you can do. So
as long as pulling back to a key
and as long as
support
it's
area
diversified
that's in an uptrend,
right?
A
Exactly.
moving
So
average,
so that support area within an uptrend is very important. And so that's what we were seeing with UNH. UNH really kind of came back to its 10-week moving average line, and then today it reported earnings. Okay.
Yep.
So now it beat on estimates. For the year, it was up, I think, $15.11 EPS.
Yes.
And that was versus raised guidance of $15. So they beat their raised guidance.
Wow.
Of course, UNH managed care. This is something that's probably going to be talked about quite a bit in this election cycle. And Medicare Advantage is something where they were seeing a lot of rising numbers there, as well as commercial. So there's a growth story here still. For as big as this company is, there's still a growth story here. And here again, look at the stability of this.
So it's earning stability of 5.
Yeah. So that's the 5-year.
Insanely low. Yeah.
Yeah, it's amazing. And in one of our other products, we also have the 3-year stability. The 3-year stability is 2. So it's gotten even more stable.
Wow.
This is just something that has, and again, the growth this last quarter, 19%. And you might say, oh, well, that's not spectacular. But, for a company this size, it's got a market cap of $280 billion. That's billion with a B. And, it's still growing its earnings at, around 20%, double digits. That's pretty good.
Yeah, and even if you're looking at it from a more traditional kind of can slim approach, it's getting into all-time highs or right near new all-time highs. Recently came out of a large consolidation, and also there's a larger trading range that if you look back at the high of in December of 2018 at 287.94. It's tested that support too, and came back and found support. So there are a number of different ways to do this, but when you switch to the monthly, it's like, oh my God.
Yeah, and granted, you can certainly see that base on the monthly. That it has consolidated for the last year.
Right.
But if this is something that's going to move out of this flat period now. It could go on a run. So that's something that could be very exciting to be a part of, and so much so that we actually we put this on Leaderboard as well. So this is something that can be played in a number of different ways.
So I wouldn't necessarily use the adjective exciting for UnitedHealth, but it could for a while.
I'm excited about opportunities. Look, did you see the monthly chart?
The monthly chart
not exciting about that?
It does look exciting on the monthly chart. It's got to kind of keep your perspective and your expectations on this one. So maybe use a smaller percentage for this, or you put it in an account that you don't watch as much and just have some alerts on or emergency stop, I guess, if it gets really.
And just as you say, with that smaller position size, the way that we're kind of approaching the performance of this list, because again, we made the decision of, okay, here's what's going to be on the list, December 31st, and we're going forward from there. And so I threw out that performance number that's based on having 20 positions. Okay, so that means 5%. And so so that is a bit smaller than you would normally see in our style of investing, where it's 8 to 10 stock portfolios.
Yeah, and I think and I think this is worth saying because we don't. I feel like we don't say this enough. The reason why we have very, very strict sell rules, right? Why we cut our losses at 7 to 8%, while we're taking a lot of gains at 20%,
right,
is because we are trying to build into a 20% position.
Yeah.
Right? And if you don't manage those well and you're not very tight with those, you can get yourself in a lot of trouble. But if you get 20% on that 20% position, that's a 4% contribution to your portfolio. And versus someone who,
as it appreciates,
Yeah.
it becomes an even larger weight in your portfolio.
So that's our traditional way. Now, if you're using 5%, right? So for this, then you can give it a little bit more time. You want to use it a little bit for a little bit less volatile stocks.
And keep in mind, because these are less volatile, you're not typically going to get, like how many stocks have you ever bought where it's a faster mover name and you get 7 to 8% stop loss in the first day? You're like, what happened? These aren't generally going to do that. You're not going to see those 8% drops in a day. This is something. Again, it's going to wear you out because it's like, it's just not going anywhere.
And that's the nice thing also about the earnings stability. And obviously anything can happen on earnings, but with these earnings stabilities, they're pretty consistent at matching and meeting those expectations that the market's giving. Right. And so that's how we're calculating that rating. We're taking all the earnings, we're putting a regression line through it and saying, okay, how
much does it vary from that regression line?
So this doesn't vary that much from Wall Street expectations of earnings. So it doesn't. It's a little bit less, I guess, a little bit less prone. I don't want to say you're never going to get gapped down on these. Anything's possible, but these ones will be a little less volatile.
Yeah. Let's go ahead and move on to another stock.
Let's go to the next one. And
I brought this one up, and I apparently it's one you're familiar with. I should disclose I own shares of this.
But you haven't even told the stock yet. You have jumped the gun. Justin.
Well, I'm just saying before I say the name, I'm disclosing Masimo.
So it is Masimo, ticker symbol MASI. And this is a medical company, a medical product company, and a lot of medical product stocks have been doing quite well over the last couple of months. And so what these guys are doing, and I've seen these machines in hospitals, and that's kind of the fun thing about when you learn about all these companies, when you're in different areas. Like in the hospital, I'm like, oh, that's a Masimo instrument right there. So I'm like looking at it. So when you go to the hospital, what do they do? A lot of times they take that little clip and they put it on your finger now, right? They put a little clip on the finger.
It's got the red light.
Yes, exactly. It has the red light. It's measuring your pulse and your blood oxygen levels, right? Masimo makes that.
Yeah.
Right. So they do that. They're measuring carbon monoxide levels in your blood. They have other instruments measure your carbon dioxide in how you're breathing. So they're getting all these vital systems.
I think there was a lawsuit coming up with Apple because Masimo was is accusing Apple of, hey, you kind of took some of our technology that we were using with that light for your Apple Watch, and it was a little shady what you did. You were treating us as a partner, and then you kind of said, oh, guess what? We solved this problem. Kind of thing. So at least the way that I read it, I haven't gotten into the details, and I'm no lawyer, so please don't sue me for what I just said. But yeah, it's very interesting. Like especially with all of these wearables and things like that are kind of becoming popular. People are thinking more and more about their health and how to monitor that health. And that's why a lot of these medical equipment makers have been so interesting, because people are really interested in being very cognizant of where their metrics are.
Right. Yeah. And where Masimo really came up on my radar was a few years ago, back in 2017, and it stopped acting like kind of like this slow-moving potential long-term leaders stock, and it became a rocket ship, right? And I was like, oh my God, what is this stock? It just went on this monster run. So that's how I learned about it. So it's always kind of been on my radar, and so I actually bought it as it broke out again. But I this is before I even knew about your project. I was like, oh, let me just take a smaller position, because this is traditionally just a little bit slower moving stock. So
you did it intuitively.
I know. It's been kind of just kind of that once. It's always been it's always bothered me, these stocks that go at that 45, 30-degree angle, and I can never capitalize on them, right? So, and they're great companies, a lot of these companies. And so it broke out of a consolidation here. It's currently up 4% from the pivot, and just slowly, methodically moving up. Good earnings,
we just had a recent
solid
pullback
earnings.
to the 10-week line.
Recent
kind of
pullback.
Bounced up from that, and it's just gotten back into new high territory from that.
Yeah. So just a slow, methodical mover. They're doing some great things in the medical industry. Take a look at it on a monthly chart, though. Right? All of a sudden, you're like, what is this? A great growth stock? It is.
Yeah.
It just moves at a different pace.
And the earnings, no slouch. I mean, the 3-year, 5-year earnings is 20, 21%. Stability, way low, 4, 6. Composite rating of 99. This is no slouch in the fundamental department.
Yeah.
And it does have a lot of that strength. The estimates going forward, 19% for 2019, 12% for 2020. So no slouch there.
And earning stability of a 6.
Yeah.
So that's the.
And we haven't talked about it too much, but cash, just to kind of throw out some numbers because I mentioned it. So the last cash flow numbers, cash flow per share was $3.19 versus earnings per share of $2.67.
Okay,
so
wow.
It's kind of that's something that you'll see over and over where it's just like, oh wow, the cash flow per share is pretty impressive.
Yeah, I mean that's really interesting because I've never really paid attention or compared those two numbers before, and that's interesting that Bill.
Yeah, it was something that he told me about like in 2000, and so again we were making this part of that initial IBD 50 kind of mock-up that Charles Harris and I were doing.
Yeah.
We kind of scrapped it at the time because in 2001, he was looking at the stocks we were coming up with, and he's like, "These are kind of junk." And it's like, yeah, but we're in this big bear market. This is the best of what's out there.
Right. Right.
And I remember he was saying like, Amaretta Hess, like, really? You're going to say that this is one of the best 100 companies out there in America?
Right.
So but that component is it's just one extra thing, one extra check mark to kind of say, hey, there's something special going on here.
Let's go to the third stock, and this is Paycom, Payc. And so I do own shares of this one too. So I have 2 out of 3
okay, not bad.
long-term leader stocks. Now, this is this is how I usually handle long-term leader stocks. Back last year when Paycom had a breakaway gap last year at the beginning. They reported earnings in February of 2019. They had a breakaway gap out of a cup. I bought it at that point, and it bored me out. Like 4 or 5 weeks, I was like, this is going nowhere.
Yeah.
Right? And then of course, once I got out, then it just started
that
30.
Kept on
yeah,
going.
just 30. And I felt like an idiot afterwards. And sometimes you have to do that because my other stocks were doing better. So it was at the bottom of my list. And so I got out of it to free up money to put in other stocks. But it has bothered me that, this is a great company. They're doing a lot of innovative things in the HR space. And so just like a lot of other cloud stocks, now these guys, they've created some great software to help the HR world.
Right.
And all in the cloud.
Yeah. And I'm glad that you said software, cloud software. Computer software was so strong at the beginning, but then it looked so bad.
Yeah.
Like in September. In September, there was this massive, I can't remember if it was like September 9th, September 10th, around there, where it just seemed like this massive shift where our stuff was getting hammered. The IBD 50 was down 2%, and the indexes were like flat. And it just looked like this massive rotation where growth was, seeming like it was falling out of favor. Yeah. Value seemed like it was outperforming, and it was just like, what's going on here? It was much more dramatic than I remember seeing in a very long time, and
it was kind of like the final shakeout.
Yeah, exactly. And you'll notice that if you look at a weekly chart on Paycom, that it really held that 40-week moving average line.
And that 40-week moving average line also is rising at a pretty sharp angle.
Yeah.
Which is pretty impressive. So the 40-week caught up to it as Paycom was starting to sell off with a lot of these other growth stocks, and then it just caught it. Right, caught it and then gave it support, and now it's kind of carried.
And this is another one, no slouch in the earnings department. Composite rating of 99. The stability, it's 5-year is 24, so it's a little bit higher there, but its 3-year is 11. So
wow. Okay,
really
so it's
really
getting
coming
better
down
and
in
better.
terms of its earnings
Because
stability.
it's a pretty new company. I mean, it's 2014, so this is kind of a little unusual
Right.
for or at least it's a software stock. 2014, you would think it'd be a higher stability than this. Another thing that's kind of interesting, if you look on a weekly chart for Paycom, if you compare the 10-week line, the red line, versus the black line, which is the 40-week line, that 10-week line never crossed below the 40-week line.
Yeah, so a lot of people talk about the death cross,
Yeah.
right? And you know, we of course don't use that as a sell signal ourselves because we just find that it's
just
late,
too much
you know.
of a lag. Yeah.
But yeah, that's a very good point.
And that's very unusual. And most stocks I've seen, doesn't matter how great they are, you're going to get a point where the 10-week crosses below, then it builds a big base and recovers. This one never crossed below, or that I can see on this chart right now. So that part is pretty remarkable. So this is growing a little bit faster pace than some of those other long-term leading stocks, but acting quite well.
And as much as that drop was pretty severe in that rotation, the base was only 27% deep. So
well within normal range.
Yeah, well within normal range. And again, the estimates going forward, 28%. This has a 3-year growth rate of 62%. Estimate, the next year, 2020, 25%. On MarketSmith, you can see these arrows showing that they're raising the estimates.
Right.
So there's a lot of positive things going on.
Perfect. So there are a few stocks there that are worth considering for your watch list. Thanks, Justin, for joining us today.
Yeah, and definitely keep your eyes out for that new feature that will be coming out in the next couple of weeks.
That's it for this week on Investing with IBD. Next week, we are going to have Ian Formigal. He's the Vice President of Investments at CrowdStreet. And we're going to talk about how technology is starting to change the real estate world and is giving more access to commercial real estate investment opportunities. So that's it. I'm Arusha Paris, and thanks for listening.